Hello, everybody. Welcome to today's episode of the Daily Dose. Today is Wednesday, November 16th. Just a quick reminder, if you like this type of content, please subscribe on YouTube and follow wherever you listen to podcasts. I come out with one of these episodes every day that the market is open and a more in-depth kind of flex episode on the weekends. And again, you can subscribe on YouTube or follow anywhere that you listen to podcasts. So let's get into what happened today. Obviously, stocks cooled off a little bit, and they fell. No real new data points as far as this market goes. Obviously, we got that headline earnings miss from Target. I think I saw that their profits got cut in half, basically, and they attributed a large amount of that. I just saw this in the headline. I didn't get a chance to really read into it, into targeted retail theft. So I'm not really sure if they were talking about like people just going into retail stores and stealing little bits of items, or what they're really talking about. But I did see that, and I thought that was kind of interesting because we haven't really seen anything like that yet as far as these earnings misses have gone and companies kind of giving their excuses for them. But yeah, Target missed. That was really the big thing today. The S&P 500 was down 0.83, the Nasdaq was down 1.54, and the Dow was down 0.12. So down across the board. The Commerce Department said Wednesday retail sales jumped 1.3% in October as Americans shelled out for food, gas, and big ticket items last month, despite inflationary pressures. Economists surveyed by Bloomberg expected a headline increase of 1% after activity was flat during the prior month. And then it goes on to talk about Target, which I don't want to get too deep into. It's just important to know that they missed. Looks like they fell about 13% today as well, so that's not good. Not really worried about the rest of this stuff down here. Basically, just they're talking about the PPI and CPI that both came in lower than expected. And I definitely think it's important to remember that this is just one data point. This isn't what the Fed isn't looking at this and going to change their policy now. They need to see a trend in the data, and that's just one piece. There's definitely no trend yet. And inflation's still 7.7% year over year, which is, not what we want. We want 2%. And even though it's come down slightly, it's going to take a lot to get it back down to the 2% target. So I think a lot of people are overlooking that right now and kind of just getting caught in the hype. But let's look at the S&P 500 here. I don't have the 200-day moving average on there right now. I feel like I have to do this every day. Let's get the 200 moving average on there. It's not as relevant today, but we almost touched it actually yesterday. Not quite. And we came back down. We're actually back down into this zone here. We're below the 39.80, which is kind of the top of that zone. We're at the 39.58 now. But yeah, you don't want to see this if you're bullish on the stock market. This is to be expected after the rally that we've seen. It's coming down a little bit. Definitely not anything to signify like a trend change as far as like this little rally we've had going. But it's significant. I think I do expect to see this market kind of cool off and come back down at some point, whether we hit the trend line or the 200 moving average first and then come down, or this is the beginning of that kind of correction. I don't know, but I do expect it to come down. I don't expect this to just be the end. I think there's still a little bit of road in front of us as far as this bear market goes. With that being said, it doesn't mean that we're going to go lower than this point right here, the 34.93. I think it's definitely very possible that we do, and I've been eyeing the 32.50. But it's not something that has to happen. I think the fact that we came back down to this June low here and broke through it barely and then shot right back up goes to show that this wasn't like another leg down from this June low, really. And I think if we get some sort of event that pushes this market lower, we could get that next leg down. And that's why I've been eyeing the 3250. And I have it on the chart here as well. So let's talk about Bitcoin for a second. So Bitcoin, again, kind of just hanging around below this zone, this whole range, honestly, that we'd been in for such a long time. Personally, with the combination of breaking below this range that we'd been in for like 5 months and everything that's going on with FTX right now, originally I was really, really surprised. I was trying to figure out how Bitcoin was holding up at all because I was convinced that we were just immediately headed to this 12,000 to 10,000, 9,000, whatever level after we broke through this range. And I still do believe that we're headed there, but I was trying to figure out why is it holding up so well right now. And I've kind of racked my brain about this, and I think if I had to guess, everything that's happening with FTX right now is shaking investor confidence in the crypto market. And when I say crypto market, I'm talking about these shit coins like the FTX coin, or Tether, or literally anything that's not Bitcoin, that are trying to swoop in and take that investment, take that capital, and these entities, companies that run these coins. I think they're losing a lot of confidence from the market after what happened with FTX. You're starting to see exchanges go down now. I think it's going to be a chain reaction of companies that are going to be affected by FTX going bankrupt. We saw today that BlockFi is also going bankrupt. There's a couple other exchanges that have paused withdrawals, and I wouldn't be surprised if they end up going bankrupt, and it's going to cause this chain reaction event, I think. And I think Bitcoin's the answer. I think Bitcoin is the only cryptocurrency that actually has any real value. I know after the whole FTX situation, I was already on the fence about my Ethereum. It was a small allocation. I wasn't allocating to Ethereum anymore. And after this all happened, I just said, you know what? I'm done with that world of crypto. My conviction solely resides in Bitcoin. And I converted all my Ethereum to Bitcoin. So now my crypto portfolio is just 100% Bitcoin. And I think other people were doing that too. And so honestly, I think there was a lot of money flowing into Bitcoin after this collapse because I think they were seeking safety in the crypto market. I think people still want exposure to the digital asset space. And I think Bitcoin is the easiest to understand. Even though it's incredibly complex, I think that it's the easiest to understand and it's perceived as being safer. And at the end of the day, it's the only coin with real fundamental value. So, I mean, the adoption is just beginning. I could go on and on about it. I'm not going to, but the point I was trying to make was that I was trying to figure out how Bitcoin was just holding up like this. And I think that's the answer. Now, I still think it's going to go back to that 12,000 to 10,000 at least. But, who knows? Maybe it won't stay there for as long. Maybe we won't get to that 8,000, 9,000 that I originally thought that we could because of this, because there's going to be money flowing in now to Bitcoin. And I think that's really interesting. So that's something I didn't see coming. It is interesting that all kind of happened just as Bitcoin cracked below this range. I don't know if that had anything to do with the quote-unquote rush of the bank that happened at FTX, but it is interesting nonetheless. So that was really all that happened in the markets today. Again, the stock market looks like it's starting to cool off a little bit. Wouldn't be surprised to see some selling there. And again, if the market starts to sell off, I think that could be the fuel to push this lower too. Again, I think another reason, honestly, why Bitcoin has been kind of holding up is because of this rally. But I was still expecting, we've had a couple of red days in a row now. I was expecting to see a sharper decline in Bitcoin. So I think it's a combination of those two things, just the rally we've had in the stock market and maybe this rush to safety in the crypto market as well. That's kind of held it up a little bit. But it could definitely be affected by a further stock market sell-off. I mean, you see Bitcoin kind of tank when the stock market does, at least in this bear market. So that's what I'm looking at right now in these markets. Again, not a ton of new data today. I am going to be I'm looking forward to the next FOMC meeting. I think that's going to be really interesting, and I wouldn't be surprised if they were a little bit more hawkish than what people are expecting. So stay safe out there. Crazy times, crazy markets. You know how I feel. You can make your trades, have your trading account, but dollar cost average into those long-term accounts and never sell the best assets. So I appreciate you watching or listening to this episode today. I hope the new mic I've used the past 2 episodes is making a little bit of a difference. I'm definitely excited about it. But again, I appreciate everyone that watched today or listened. And until next time, I will see you tomorrow.